We take a closer look at the Yacktman Focused Fund. According to Bloomberg data, the fund was the top-performing U.S. diversified equities fund in July, making it a Bloomberg best. It is also a 5-star rating from Morningstar. Don Yacktman manages the fund. He joins us right now on phone. Don, great to have you back here on Bloomberg. I'm going to jump right in and talk about Viacom, the MTV unit that's responsible for the reality TV show we were just talking about, The Jersey Shore. Let me ask you, I'm curious, you like Viacom as a stock? Do you ever look at some of the properties like a Jersey Shore and check out what kind of all the excitement's about?
Well, you know, it becomes one piece in the puzzle, but the real pieces of this company are the stable pieces of Nickelodeon, Comedy Central, and MTV. The combination of those, I mean, in the total, the viewership at Viacom represents about 20% of cable TV. So that's a huge share. So look at it in a total piece. You know, there are other pieces too, but as a total, that's a huge amount of the viewing that's done on cable.
Right, it is a big part. The shares of Viacom are up about 17% this year. What do you see making that stock go even higher? Is it, again, just that big share and increased ad revenue and so on?
Yes, and I think the stability from the cable, although they are subject to more advertising than, say, a News Corp is as far as the cable part goes. So, you know, there's going to be potentially some fluctuation, and the earnings could be a little less stable than some others, but it's still relatively cheap, and I think it's, you know, it's not as cheap as it was a year and a half ago, but it's still pretty cheap.
Don, there's another stock that you like that's been in the news, big news, in fact, yesterday. About this time yesterday, we were all over it, and that is ConocoPhillips. It's planning to sell its entire 20% stake in Russia's Lukoil. That's been valued at about $9 billion. I mean, how does this move impact the value of the company in your view? Does it make it even more attractive?
Well, I think what is an indication, and you look at the whole thing that the management's trying to do, is that they're concerned about shareholder value, and they are, while they're getting rid of this piece, I think they're still trying to focus more on the production side as opposed to the refining side. So I think overall, I think that, you know, again, it's a very cheap stock, and if oil prices go up, and I think in a world, I mean, if you look at where the economy is today and where the price of oil is, and we're still just lagging.
Right.
Once the economy heats up, I think we're going to see oil prices head north.
Don, just got 20 seconds here. Microsoft, stock's down about 14% this year, but you like it as well. Just quickly, what's the attraction here in your view?
Well, in spite of them not doing a pretty good job in some of their investments, the stock is just dirt cheap, and they continue. I mean, the wind continues to blow to a large degree at their back. So some of the things are likely to pan out, and at this price, you know, with all the cash they have sitting on the balance sheet,
right. All right, we're going to leave it there. Don, always good to get some time with you, whether it's on the phone or on TV. We appreciate it. Don Yacktman, manager of the Yacktman Focused Fund.